Oh, right. My name is L. Jermaine Russell. It is April 26th on a Sunday. Um, I hope everyone is safe and sound via this coronavirus has, taken many lives of, people and, have caused so many disruptions in life that I hope really everyone is safe and sound and, you know, really taking the best type of care for themselves, right? So, with that being said, I pass much love and blessings on to you and your family and loved ones. So, with that being said, I do want to go over a couple of stocks that I traded during the week of April 20th through the 24th, which, just this past week. I'm trying to come out with my videos a little bit faster. It's just that I'm still working out the kinks with some recording, and I'm also trying to get some more yoga videos out so I can really be able to serve and help a community of traders who are, high strung, but sometimes just need to relax. So I'm here for you because that's what I do too, right? So, anyway, so I traded 9 stocks this week. Not what I want. I want to reduce the amount of stocks that I traded, and I've gotten significantly better. Because I remember when I first started trading, I was trading like, in a month I could have traded at least, 40 stocks easy. So now it's like I'm coming down. Last week I only traded like 7 stocks. So this week I traded 9. So I'm still, I'm getting there on reducing the amount of stocks because amount of stocks trading because when you're just, there's going to always be a stock that's trading. There's always going to be a stock that's moving up or down, whether you play it long or whether you play it short. But really, this should be a boring game, right? Many traders who have had much experience, much more experience than me, have always shared with me that, this should be a boring game. You should, already have your plan. You're in your exit strategy. You should already know what your game plan is from the beginning, what type of stock that you typically look for, and what type of indicators that you already follow when you are, in a stock. So, I have several indicators that I follow, and if I follow them to the T, typically I'm correct at least 70% of the time. But when I'm stubborn, then will lose, and I significantly lose, right? And I say significantly lose like 4%, 3%. That's a significant loss to me. Um, you know, I like to keep my losses below 2%, but when my stubbornness gets involved, then that's when you lose. So you got to really know behavioral. The really trading is really a behavioral psychology thing. Like you really is you and the market, right? You are taking in information, and you're taking in parts and bits of information. You have to consolidate it and dense it, and use it for your advantage during whichever time frame that you're trading on. So with that being said, let's start digging in on some of these companies that I went through this week. So AGNPF, don't know much about it. Not gonna lie. Like I know it's an OTC stock. And look, this is my notes. Typically, I have better notes, but I bought this typically just because the technicals were there. So, so essentially what happened here is that it spiked up here. I already had this on my watch list. Like I have a couple of watch lists, and this is just one of them. And the bigger watch list that I have, there's like movers on the upside there every day, right? There's never not a day where there's a stock that's moving at least 20%. So, at some part of the day. So, like with that being said, I saw this stock and said, hey, I'm buying it on this first green day. I bought it on this first green day. It got smushed down the next day. And being how the level 2 is on the OTC, I felt really insecure on holding this stock, right? So, if I take it out to minute 5 day chart, um, yeah, so I bought back here and it was doing everything that I like, right? The EMAs are crossing over the VWAP and all that other good stuff, and it was trading. It was trading, right? I was seeing this, and then look, and then it just consolidated, and it just looked like it was coming back down to me on the day that I traded this. Now I could be just antsy, but as you can tell, the stock is following the trend, and I had little patience on this stock. It was purely a technical play, and it was purely just being choppy the whole day. Um, I don't see. I did see. I still see this going higher, but because of how it looked on the level two, I, here, if we can zoom in just a little bit more, I bought back here, and this is Monday still, um, and on this Monday, like around right after lunch. So, and I'm not a big fan of buying. Um, During that 12 p.m. to 1 p.m. time frame. So I typically wait until after 1:30, maybe 2:30 to see how the stocks that were previously moving at the beginning of the day, how they're moving towards the end of the day, and if there are anything else that might be moving potentially for tomorrow in the after hours. So um, when I bought this and I saw it going high, I said, "Oh, okay." And then I really did get faked out um, by my own indicators. Like, this is still this trade. The momentum is still trading sideways. It's not overbought or oversold. The VWAP was just slightly coming towards the to the 200 EMA. It was I got out and I got afraid. I should have held, and look what it did on this is Wednesday, right? So if I held, and this is Tuesday now, so I'm thinking Tuesday we're going to have a morning panic, and it didn't. It just kind of held steady, and that's just really, me not taking more reference of how it trades, intraday, right? Really needing to have that patience on this one, right? So, this is it still looks like it's going to come down. I could have got it from, that 31 cents to 39 cents if I just held, but I chose not to. And, I end up losing out on this run. But at least I saw it. So that's always key, for something that I knew nothing about but only saw its technical chart. Um, so with that being said, that was a scratch, right? Um, let's move on to the next one. Let's go to GNPX. GNPX really, really, really disappointed me. I bought this a couple of times. Um, and I think the last time this last time that I bought it, it was more out of pure frustration than anything else. Like you saw, I bought it on the way up, like so this was a good stock to me before. So let's kind of zoom out. Let's just see what did I do here. If I can see anything. No, buying. Apparently, I was buying and selling on the way up, and buying on the way up and selling on the way before it came down. But let's go on to this because I don't know what my mindset was back here. I can clearly talk about this right here. Um, Essentially, I have a meeting coming up. Great. So essentially, I bought this, after it ran up, and on this Wednesday. This was Wednesday. So on the Wednesday, I bought it when after it ran up, and I said, okay, this is holding, and it was holding support right here at that 240-ish area. I ended up getting it at 248, a little bit higher than I really wanted. Like I said, when on pullbacks, when stuff like this happens, and like the EMAs start crossing over the VWAP, which is this purple line. Did I say that beginning? No, I didn't. So I'll put this at the bottom comment so you can really check out in the info box so you can really know that the green line is the 50 EMA, the yellow line is the 100 EMA, and the red line is the 200 EMA. So when the EMAs cross over the VWAP, which is the purple line, a stock tends to go higher, which it did, right? The VWAP right here, the EMA, the 200 EMA was kind of close on crossing, but it still kind of gave that spike up to the 274. And so it still had that energy, right, to spike higher. So what happened here? Instead of me just selling into the spike, which was only 30 cents, I anticipating it going a little bit more. I thought it was going to go up to 3, and then I would have definitely sold. But because I tend to be stubborn, particularly on spikes, when I can just sell into the spike, I ended up holding it, and then I not only held it, but I bought some more. And the reason why I bought some more is because I said, okay, if it's going to hold support at 240, at least I can buy some more and then anticipate another spike up to challenging the 270s, and then anticipating the $3 area. And it never did get there, and I will clearly show you why. So, when we come into the year chart, even though we are getting momentum on the upside, and we saw that this was a strong green day, there's still a lot of overhead pressure down on this from the 50 EMA. So if we can look back here, there's a lot of consolidation. This happening between the 50 and the 100 EMA, right? And might have spiked over the 50 EMA, but it also came back down, right? It spiked over the 50 EMA, but also came back down. So the only time that this actually happened, held above the EMA, is when this spike happened, was way back here. And, that just shows a testament of its long-term chart, because at this time now it was heading to being overbought, after being previously overbought. And so, this is a recent spiker. This is why I wanted to get it, but it's also its long-term chart. As you can tell, it's horrible. They probably had a reverse split in there, something like that. I don't know. Toxic filings, whatever the case may be. But I saw that it could spike up higher. It didn't. I sold at 238 from buying at I think it was 49 as my average. So I lost 11 cents a share. You know, it could have been a whole lot worse, but I just didn't do it. So we'll see if it kind of does it on Monday, if it does anything on Monday, because the only thing that they really just had was a change in vice president, and they sent out a letter to their to board members or to shareholders saying that there was going to be a meeting in June. So there's not really much going on with the company as a whole. So since there's no great news, there's nothing really happening. So yeah, let's go over WTI. So let's see. WTI was another stock that I bought. I thought it was gonna go a little bit higher. I saw it. This is also a reverse of my strategy, so I'm not a big fan of stocks that are reverse of my strategy. So I'm just looking at what I can do and how I will do it, right? So, and with that being said, yeah, I saw it originally. Why I even had this as even a thought is because I'm in a group, and this group has a couple of investors, and some of the investors are always saying what they want to they want to get into oil, or they thinking about real estate and stuff like this. So when the stock market really when the oil market really took a hit here, I started to see that there was an uptrend in WTI, which I didn't understand whatsoever, since there was such a magnificent hit. It's such a company that has so many floating shares available, and it has such a high short percentage. I didn't want to really be caught up in it, in the hype, but also because it went from 187, well, really from its all low, $1.07. So if I had bought at the $2.09, like I was like, I should, and I could have got in here, held it all the way up to 3, which if we go back a couple of days, We'll see. Like I said, let's probably explain why I don't like the reverse of the strategy, because some people do ask me, and I know a lot of people do play this strategy, where they try to catch it from the lows and then and then ride the wave on up. And the reason why I do that is just because it takes such a long time for it to happen with so much overhead resistance. Yeah, if you find the lows on a good stock, then yeah, eventually the 50 EMA will cross over the 200 EMA, and that's called golden crosses. If you didn't know that, that's something that's really a good technical indicator to follow. But since this will take some time and I don't have the patience, I'm really trying to get into plays that can spike a day, within the day, or overnight. So I would prefer the overnight, but stuff like this, I can see this being shorted down longer, or harder down. So I'm not a big fan of it. However, I still played it just because of the sentiment that was going on itself, so, or with oil markets itself. So here, like I said, I am buying here when it pulled back. I was hoping it was going to pull back a little bit deeper, but it didn't, and then it ramped up. It ramped up, went up to 296, and then this is what I was talking about on the pullback. When it comes to pullback, it tends to test that 200 EMA. Maybe it might go down a little bit lower, but it just depends on what the float size is and what the RSI does. So if the RSI doesn't have a large float, float like meaning shares that are available to trade long or short, then if it doesn't have that, then it won't go as deep. But if it does have a float like of, let's say 200 million shares, 500 million shares, it could go deep, deep, deep on the pullback before coming back up. But, testing that 200 EMA is always something to look for as a critical indicator to find support. All right. So I found support here at the 266 area. I wanted to buy more, but I chose against it. And then, as we can see here, it went up to 290, spiked for a second at $3. And then once I saw on the level 2 and the R and the VWAP, and once I saw on the level 2, the VWAP, that the price was starting to trade below the VWAP, I said, it's time to get out. And that's what I did. I got out when that happened. I wish I did that on BLPH, right? So BLPH, this is the one that I am like, you know, I'm kind of upset about, because I led people to water. I said, if you trade this and sell this at this price, 16. I said like the 1680s and sell at 18, you can make your money. Not only did I not do that, but I also got bought back in after selling for a small amount of profit. Right. So let's go over this trade step by step. Right. So essentially, first I looked at the long term. I said, hey, this is the lesson of the this is the last stock I'm gonna go over. The other ones that I did, I made some money on it. I don't really care, especially INO. Don't really care because I didn't lose on those ones. This one I lost. So this is the one I want to go over. So sorry for that defiant stance, but just saying, don't want to talk too long. So essentially, what we have here is this stock, BLPH. It has nitric oxide. The nitric oxide is supposed to help patients who are suffering from coronavirus, who are dealing with their breathing, because the actual molecule nitrous oxide helps dilate the vessels, so it allows more blood flow to go by, so you can better oxygenate, because oxygen binds to the blood cells, so you can better oxygenate your lungs, right? So we have this system, the good ventilator system here. And what they're trying to figure out now is funding. So I'm tied into the sentiment of funding, right, as opposed to the sentiment of patterns. So the pattern was that not only did it spike before, but it became a red candlestick. right? Not only did it spike before, but it became a red candlestick. So trying not to get caught up into that because it spiked before, red candlestick. Spike before, spike before, but it's a red candlestick. And it's still doing that, and it didn't quite do that here, but it spiked, and then, it's a candlestick. I'm not saying that this will go up tomorrow. Tomorrow being Monday, April 27th. I am saying that this stock is still, and I'm working with confirmation bias here, so bear with me. Um, it still has a chance to not only hold its own on the selling pressure because the candlestick wick is not that long, it's not that deep, right? And then when it's not that deep, it tends, to hold their support as a green candlestick and then possibly making this an engulfing candlestick if it trades with volume. As we see with the MACD, we see that there is momentum going forward, right? So I did get caught up with the momentum of the stock and that it's not being overbought. And the fact that it's not overbought, it pulls back a little bit, but still has a chance to go higher. It runs with me. So, being the fact that one, it wants funding, right, and they applied for funding at NIH, and two, they also applied for funding with a biomedical advanced company, not a company, but organization. So they're getting funding from them as well. Just waiting for pretty much the news to happen with this. So it's a low float, 6 million shares. I think the short percentage was about 4 or 5%. But the volume is really what needs to take off on here. So once that volume happens, then this can go higher. But why? That's the main reason why I ended up not only selling, not only like buying the shares, but holding the shares afterwards because there was two opportunities where I could have sold it and did not choose to pick either one, right? So the first opportunity was here, but let's go to when I rebought it. So after I sold it here, I said, you know what? Nah. I know I bought it back here. I got an average price of $16.97. It spiked to 18, almost $19. But I was like, hey, it's supposed to go to 20. It came back. I said, hey, you're not coming back. Why you came back? And now I have to sell because it's actually morning selling. So this panic sell that happened Friday morning caused the price to spike down or drop down. So once it did that, not only did it hold support at 1640, I could have waited, and instead of allowing my emotions to get in here. And this is why trading with emotions is not the best, because when you trade with emotions, you end up really discarding your plan. Like this was a perfect plan. Like I told friends, hey, if you buy this stock at 16.80 and sell and near $18, you can make at least $1.50 a share or $1.20 a share, right? And they were like, yeah, that's I like buying stocks where I can always make $1 a share every time I enter a trade, right? But I got greedy. I got greedy not only with the fact that it's a stock that is a low float, but I'm waiting for news and I'm just waiting and salivating and saying and taking the pain that the price is going lower. So as the price goes lower, when I actually bought here and I ignored my MACD, I ignored my RSI as they all were saying, hey, we're about to test the 200-day EMA, and that's what it did. And not only did it test it, like I said, sometimes it can go a little bit deeper depending on the volume and the float. So yeah, that's what it did. It went a little bit deeper. It became oversold. Right. So now let's zoom in a little bit more. Right. So now that it's oversold here, we see that it's not only trading over the VWAP, this purple line here. I know the purple line is, you probably can't see it as much, but I'm not highlighting the green, I'm highlighting the purple. So the purple line is trading below the purple line. And because it's doing that, you see that the 50 EMA is also crossing below the VWAP, and then we see that, hey, the 50 and the 200, I mean the 50 and the 100 EMA are kind of close to each other. They look like they're narrowing downward, and that is what's happening. It found resistance here at 1750. Not only could I have sold it there and allowed it to be what 40-cent loss, excuse me, right? Because I bought it right back at 1790, which also the 90 cents area is not a price point that I particularly like to choose. I particularly like choosing to buy in the, you know, 70s, 60-cent range area of whatever dollar stock that I'm holding. But it didn't do that. Got emotional. So what did I do? I buy some more at 1750. What happens? Still emotion. Because I'm still not paying attention to my indicators that the EMA is crossing below. Now, it has the potential of crossing below the 100 EMA, which it does. And then not only does that, it crosses below the 200 EMA almost, right? So it kind of does that. This spikes all the way down, becomes oversold, and it kind of holds support here at 1650. And it holds it throughout the rest of the day, right? Support at 1650. But the biggest thing here is that, like I said, there was two places. I could have sold it right back here again instead of buying. I could have sold my shares instead of buying another lot, another 100 shares. And then not only when it comes back up to test, you know, the 1770s, not only did I not sell it to get a 20-cent loss, it comes right back down. And you see how the EMAs, they're trying to cross over with the VWAP, but it doesn't. And because it's starting to trade sideways like this, typically when it trades sideways, you know, after an uptrend, you know, and it's been down on the day and it's overbought, you know, it's gonna start collapsing, and that's what it did, and it held, you know, the 1650 on the day. So, you know, my biggest thing is that yes, I know that I ignored all of my indicators when it comes to day trading on this, and I allowed myself to get emotional as well. Um, the third thing is that I have allowed myself to be um, biased to the stock. I have almost married this stock now. Because I married this stock, it has given me, you know, a 4% loss right now. I'm holding 4% of a loss. But like I said, if momentum and everything, if the indicators continue to do what it has been doing, this stock could potentially test $20. And I'm saying the indicators on the long term chart. So I know on the short term intraday, it did not do what I anticipated in doing. However, if the news starts to come, the EMA is already crossing. The 50 is already over the 100 and the 200. We just need more of that 100 to cross over the 200. If we see more of that action happen, you know, we can see a nice return on the upside. We can see it, you know, really testing this $20 area. But I'm not I'm not a gambling man. I am here just to witness what the market can do and anticipate with my plan that it tests $18 again prior to it pulling back, or even coming to yeah, like $18, maybe 17.90 at the most, right? But I can definitely see in it living in the 1690s if there's not enough volume happening. So hopefully we get some volume. It might do the same uptrend like it's been doing after a spike and this slowly uptrend. So I'm just trying to follow the pattern. Like what pattern is it making? And it's making that pattern there. So, you know, after it spikes, it pulls back. After it spikes, it pulls back. This is when it was below the 200 EMA. Now that it's above the 200 EMA and the 50 EMA because of the golden crosses, we can see this go significantly higher. So that's all I got for now. I have been talking for some time. Like I said, I traded a couple of other stocks. I'll just slide the screen over a little bit where you can see INO, VXRT, a PAVM. I have, you know, a couple of different ways of trying to really, narrow down on how many stocks that I trade. Um, because this is the ultimate list. Like there is so many in my watch list that is crazy right now, right? If you're if you're watching, like you should see this. Like this is amazing. Like there's so many, and I still want to get back into gold. Like these there's so much, but I had to like really separate everything because there's too much. There's too much to see at one time. You get overstimulated. So last week, this was me last week. Especially with gold, especially with INSG, especially with CODX. Like I was doing really well with those. So like CODX, like it was bringing me back to life. So so I will try to show as much as I can and share can, so that we can all learn. So that's all I got for today. I hope this helps. Leave a comment in the description box below, or leave a comment in the comment section below. I will put down the chart titles in the description as well, so you'll know which color is which when you're following. And please always stay hungry and move and move and move. We got this. Stay hungry. Stay safe. Stay, just be safe. Just be safe. I should say that as be the last thing, right? I'm vibrating all this good energy. So stay safe. Be hungry. Let's make this money on the market.